Hi folks, now today I want to talk to you about how much money you really need to start Forex trading, what type of growth you should prioritize, and how much risk you should take per trade. Come on. Right, so here you go. How much money do you need to trade the Forex market? It's got to be one of the biggest or most common questions that I get asked in this business. How much money do you need? It's not really a big surprise really, because obviously all the brokers out there and the marketing, they're all trying to suck you in to become a trader and say, here, you can have an account for $100. And then you see all these other YouTube videos where people are driving around in their fast cars and they're young kids and they started off with not very much. So what's realistic? How much money do you really need to trade the Forex markets? Well, I think that all really does come down to what your objectives are. Now, some people are coming into this with the view to give up their day job and to just trade full time. This is going to be their full-time career going forward. Some of you may be coming in here to supplement an income. So you might have a job, a full-time job, but this is like a little bit of extra pocket money. Some of you may be at the retirement age and you're looking to basically trade the markets to get a better return on your money than you're getting basically in a fund or in an overnight deposit. So it really does depend on what your objectives are. So there's no really one rule fits all. But what I will say, just because the broker is offering you entry levels of $100, $200 or $500, it doesn't mean that you necessarily should be just embarking on a career, because what I've seen in the past is a lot of traders do just that, and all it means is that they blow $200, $500 accounts. It's great business that actually for the brokers. Brokers are setting up all these people on $500 accounts, $200 accounts, end up, just seeing the trader lose the lot. You put all those together, it's quite a nice little income for the broker, I think. Remember this chap, Albert Einstein. Albert Einstein once said, well, I don't know if he did actually say, Albert Einstein spent a lot of time saying things. I don't know if he actually did say this, but he's quoted as saying anyway, so I'll quote him. Albert Einstein once said, the eighth wonder of the world, compound interest. Those that understand it, they earn it, and those that don't, they pay it. If you've got a credit card, chances are you understand what compound interest is. You're paying interest on the money that you owe, and that goes to the debt, and the debt is growing, and every month you're paying interest on that ever increasing size of your debt. But if you understand how compound interest works, you should be able to use it to your advantage. So I say, if you are starting with a small account, then you should be looking at the percentage gains and not the dollars. Let's face it, if you're starting off with $500 in your trading account, chances are you're not going to be giving up your day job. You're not going to be able to turn that $500 into a business, because the market is not there to give you that. Of course, you can get a nice percentage return. Percentage return grows over time, and that's eventually how you can basically build a bigger account. You're putting your gains and you're making gains on gains, and the percentage is the most important factor when you're starting off with small accounts. So what I think you should be risking per trade? Well, first of all, I think you should be risking no more than 1%. I've read it in all over the books. People say risk no more than 2%. I've read even some decent authors as well say no more than 2%. I think that's really excessive. I actually think 1% is excessive. I only risk 0.5% on my intraday trading on one trade. One of my strategies, I only use 0.25% on the strategy as well. But risking a small percentage per trade and let that account grow over time using compound interest. If you target 5% a month, 5%, not a great deal, is it? Not if you've got a $1,000 account. 5%, $50, not enough to pay the internet bill, is it? But it's still a big return. 5% on a compound basis over 12 months is about 80% return on investment. I don't know many businesses that return 80% every year on their investment. Very few and far between, I would say. So 5% is a big return. So if 5% is what you're aiming for, then you've got to put that in terms of risk per trade down at say 1% or 0.5%, something like that. Now clearly, you're not going to be able to give up your day job with a $500,000, $2,000, even a $5,000 account hitting just 5% a month. But you should be thinking about those percentage gains. And if you can prove to others, to yourself, that you can grow an account 5% each and every month, the opportunities for you are going to be vast. So don't think about the dollars. Don't think about what you can do with 5% on 1 month on $1,000 and what you do with your $50. Not a lot is the answer. So brokers will offer minimum entry, $100, $200, $500, $1,000, and they offer excessive leverage. It's exciting, isn't it? Excessive leverage. You can turn small accounts into big money. It does happen. In fact, I had some chap a couple of months ago talking to me on a private one-to-one mentoring session. A young chap, he took $3,000, he turned it up into $23,000 in the space of just 2 weeks. Massive. I thought this is going to be a really hard one-to-one. In the same conversation, he told me he was back down at 5,000. So he took it from 3 to 23, back down to 5. Wow. I don't speak to him anymore. I don't know where he is. He's not in our trading room anymore anyway. Using excessive leverage can be a killer. Now, sure, if you get it right, you hit the luck, you might get a bit of short-term luck. But if you want to be consistent, if you're serious about being in this game for 1, 2, 5 years, for the rest of your trading, don't be using excessive leverage. It is the short, fast way to the poorhouse. But just because they offer $100, $200, $500, $1,000, it doesn't mean you should be just getting involved, because, as I said earlier, the broker is basically making a lot of money just by seeing these small accounts blow up and traders come and go. So if you are able to make 5% a month, 4 to 5% a month, big return, you should be looking at going down a different road. And the road of getting funding. Now, as I say, you're not going to be giving up your job, but a $500,000 account. But if you can prove you can trade, there will be lots of people, family, friends, companies, prop firms that will want you to trade their money for you. And that is where you start to think about making a decent living out of trading. Build a track record. Show your track record to a prop firm, to investment houses, come to people like us. And there's always people that will be looking to invest in you as well. So if you are starting off with a small account, $500, $1,000, even $5,000, don't think about throwing in your day job just yet. Think about proving yourself as a trader. Build a track record, build some skills, build the emotional discipline, and then think about where the money is going to follow. If you can prove you can make the money, I guarantee you, you will follow. So that's basically it. How much do you need to start off a trading account? About $100. Should you be thinking about giving up your day job on $100? No, think of it in a different way. Hi there folks, hopefully you enjoyed that video. Hopefully you learned something there as well. Now, don't forget to follow us on all our other socials. I'm always leaving tips and tricks on there as well. Don't forget to give this video a like. If indeed you liked it, give me a thumbs up. Don't forget to subscribe to the channel and hit that notification that will alert you when my next video has been released, which will be very soon. See you there.